The housing freefall seems to have finally hit bottom, but has the era of record low mortgage rates bottom out along with it? Joining me now, Tanya Marchiol, CEO of Team Investments. Tanya, welcome to the show. It's great to have you here. All right,
Thank you so much.
3 of the 4 last weeks, mortgage rates have ticked up. Is it over, and where's it going?
Well, you know, the bottom line is the Fed said that they weren't going to raise rates with unemployment until unemployment hit 6.9%. Obviously, we know we're at 7.9 and they're raising rates a little bit. But the bottom line is they cannot afford to raise rates a lot. Not with $16 trillion in deficit and the economy slightly diminishing and, this unemployment number, they can't afford to raise these rates.
Well, I hear you. I don't know if they're listening. So rates slowly ticking higher here. Is that going to do anything to the housing rebound? Do you worry that people are going to step back and not buy?
No, not yet. When you look at it realistically, if you buy a $275,000 house today with 5% down, your monthly payment is still less than in 1987 buying a $175,000 house with 5% down. So we're still in a better era today for housing than we have been in a long time, and rates are at 3.5%. I mean, that is still exponentially low. So people need to understand where we were, where we are, and just move. If you want to refinance, it's the time to refinance now.
Well, Tanya, we're showing a graph, a chart of 30-year mortgage fixed rates from all the way back to about 2008, 2009, and it is a steep slope south to 2013. I mean, when you look at this historically, it's almost comical that people are worried about rates popping back up because most people have never seen this in their lifetimes, right? I mean, how often in your career have you financed houses at this level?
Oh, this is unreal. My first house, I bought at 8.9%, and I was happy. I think my second was at 13%.
Wow.
And I was making the payment. So having a 3.5% interest rate is unheard of. And it's great for people who are buying houses, whether they're investment properties or personal family homes. It is time to buy. I don't think it'll affect the buyers as much as it will affect the refinancers.
And that's a critical group of people here because it says people who could refinance, maybe get out of their house, might want to move on, get a new loan. Those are the folks that are kind of clogging up the whole system at this point. I mean, normally there's so much turnover. When do you expect us to move to a more normal market?
I think we have a couple of years before we hit normal. All those states that are judicial foreclosures, like New York, you have a lot of bog and mire going on still, and those homes have to hit the market. States like Arizona that were non-judicial, they're starting to level out and creep up, as we saw in the Case-Shiller numbers. But really, we have a while before we hit a normal market. Normal means consistent, and consistent isn't going to happen for a while.
I want to come out to Arizona and look at property. Will you host me?
Anytime, absolutely.
Tanya, thanks for coming on tonight. Really interesting stuff. And I know people follow these rates so closely, they're eager to hear anything about it. Thanks so much.
Thanks a lot.
Well, still to come, my 2 cents more. And we've told you about investing in wine, but how about rare coins? Is this the right path for you? Find out next.
None of you better look at me funny. You know my name down, give me my money. Sing it!
Baby, I got your money.
Sing it, girls!
I said, hey,
let's sing it right now!
I got your money.
This year, 3,000 people will be diagnosed with mesothelioma. Any one of them could be your